Sunrise Interviews is brought to you by Valley Strong Credit Union.
Welcome back. Joining us once again is David Anderson, financial advisor and managing partner with Moneywise, here to talk about the latest changes in the economy. David, thank you for joining us this morning. First, let's talk unemployment. First-time jobless claims totaled 742,000 this week. Does that tell us anything? Did we learn anything this week, or are we kind of in the same place as we were last week?
Well, we're not in a drastically different place this week, but it does tell us that things aren't getting much better. In fact, they might be starting to get a little bit worse. You have a lot of programs out there that have helped kind of prop up our employment, and some of those are running out. So the fact that we saw an uptick for the first time in 4 weeks is certainly not a good sign, but it's not a sign that, you know, misery is ahead necessarily, but certainly we don't like to see these numbers.
The U.S. Treasury decided against continuing the Federal Reserve's emergency lending funding programs, which were set to expire December 31st. Can you explain what this means for the average person?
Yeah, you bet. So the Fed, look at it as our country's bank, and that bank lends to different institutions, banks and things like that, to allow those banks, our regional banks, to operate. And they were granted a whole bunch of money to use and spend during this time. Well, they hadn't been through all of it. And so they've ordered that money, Steve Mnuchin has ordered that money go back to the Treasury. Ultimately, they're going to want to spend that money on other programs. The Fed doesn't like this announcement. They want those tools. They want that money to be able to use, but yet we're not getting any more stimulus, and so Mnuchin is afraid they're going to maybe run out of money, and so they're taking that back to spend on other things.
Obviously, we're in November. We're about a week away right now from Black Friday, so shopping uptick for the holiday season is, it's about to rise through the roof here. Local businesses, how are they going to be impacted right now with the lack of stimulus?
Well, I hope retail sales rise through the roof. There's not a lot of positive data saying that that's going to happen. I mean, we'll certainly see an uptick in retail sales, but in October, we actually saw retail sales rise, but not nearly what we expected. So it looks like consumers are nervous. They're less confident that we're going to get more stimulus, so that means less spending. Now, when you look at it locally, local businesses, hopefully we'll have residents look locally and look towards our local businesses that are really, really suffering, but ultimately people need to have money in their pockets to spend, and we'll see in the end how retail sales look this year, but I don't think it's going to be fantastic.
All right, and we were just talking during the break finally here. The deadline is, we're about a month and a half away from the deadline expiring for student loans. That means that kids that just graduated college are going to have to start paying back that money, but a lot of those kids do not have jobs. Well, what's the risk for people there, in terms of having to pay back those loans?
Yeah, so this is a big problem. Many of these loans went into forbearance, and that provided a lot of relief to individuals. Well, now come January, that's ending. So that means you might have to come up with some money. Now, the first thing I would recommend if you don't have money is call your servicer. In fact, I wouldn't delay. I would call them now and find out what are the options. How do I have to pay back the money that I haven't paid? Is it all at once? Is it over time? But the more information that you can get right now about your loan, the better off you're going to be come January when some of it comes due.
All right, David, thank you so much. And coming up, we'll have more news after the break.